Very good morning, students. Today, let's learn about the not-for-profit organization and accounting of not-for-profit organization. As you all know, NCERT syllabus of accountancy, it is bifurcated into three parts. First one is NPO, that is not-for-profit organization. Second one is partnership accounts. And the third one is company. So, not-for-profit organization, it is having one chapter. On partnership, we are having 4 chapters. On company accounts, we are having 6 chapters. Totally, we are having 11 chapters in our syllabus. So, today, let us start. Let's learn about the not-for-profit organization, how to maintain the accounts of not-for-profit organization. So, first of all, what is the meaning of this not-for-profit organization? You all have studied about the different forms of organization in business studies first PUC. Sole proprietorship you have learned, about the partnership, about the joint stock company you have studied in the first PUC. But this is another kind of organization, not for profit organization. The name itself will reveal the meaning of this word. Organization which will not work with the profit intention. Such organizations are called as not-for-profit organization. So, coming to the proper meaning of this not-for-profit organization, you may get 2 marks question on this. The kind of business which will work without the intention of profit but for the betterment of the society is called as not-for-profit organization. Take the examples. Sports clubs are there. They will not work for the profit. They will work with an intention to spread the sportive education. And coming to the educational institutions, they are not-for-profit organizations, colleges, schools, and other charitable institutions. They will work for the society. They will not work with an intention of profit. All these organizations are few examples for this not-for-profit organization. And coming to the features of this not-for-profit organizations, you may get a 2 marks question again on this concept. Mention 2 features, state 2 features, they may ask you in the examination. So, as I told in the meaning, the first important feature is it is not profit oriented. It will not work for the profit. Second thing is it will work for the betterment of the society. And the third one is the sole objective, the sole aim of this not-for-profit organization. It is working for the society free of cost or at some nominal cost. It will not work with an intention of profit earning. It will work with an intention of serving. Service motive it is. And coming to the important source of income, there are many sources of income. First one is subscription. The second one is donations, legacies, income from the investments, and many other income sources are there. And the fund which will be raised by these organizations, it is called as capital fund in this context. So all these are the few features of this not-for-profit organization. Right. After the completion of the features, the books maintained by such organizations. First thing, they will maintain as usual all the books which we will maintain in the other organizations also, journal and all the other books we will maintain in case of not-for-profit organization also. But coming to the financial statements, final accounts, we will prepare 3 important accounts. First one is receipt and payments account. It is nothing but the cash book. It is the summary of cash receipts and cash payments. Whatever you receive and whatever you pay, such things will be recorded in a particular account called as receipts and payments account. It is a kind of real account. You may get a question, what do you mean by receipt and payments account? You have to write receipt and payment account. It is a real account which is the summary of cash receipts and cash payments. We will prepare this in order to calculate the closing balance of cash or bank. So this is about the receipt and payments account. The second one is income and expenditure account. Income and expenditure account. This is the second financial statement which we have to prepare in not-for-profit organization. So it is nothing but profit and loss account. We will record all the expenditures at the debit side. We will record all the incomes at the credit side. And at the end, we will get the result of the business organization, that is profit or loss. Such profit or loss, it is termed as surplus or deficit in case of not-for-profit organization. In order to calculate that surplus or deficit, we will prepare the particular account called as income and expenditure account. Income and expenditure account, it is a nominal account. It is just like profit and loss account. Income and expenditure account, it is a nominal account which is prepared with an intention to calculate the surplus or deficit by recording all the expenditures and all the incomes. And the third one is, it is a statement, that is balance sheet. As you all know, to calculate or to judge the financial position of a particular business, we have to prepare the balance sheet at the end of the year. So, as on March 31, we will prepare the balance sheet of the not-for-profit organization. We will record all the liabilities and the capital fund, and at the another side we will record all the assets, fixed assets and the current assets, and it should get tallied. So, these two accounts and another statement, all these three financial statements are considered as the final accounts of not-for-profit organization. So, in our problem, they will give receipt and payments account and they will give the balance sheet of previous year. On the basis of these two, we have to prepare income and expenditure account. By that, we have to calculate the surplus or deficit. And at the end, we have to prepare the balance sheet. So, for this, they will give 12 marks. There is a format. We have to follow that format and we have to prepare income and expenditure account and the balance sheet at the end. And to prepare these things, we need few basic terms. We need the knowledge about few basic terms. They are capital receipts, capital expenditures, and revenue receipts and revenue expenditures. You all have studied these four terms in your first PUC accountancy. Just I will recall. Capital receipt. There are two important words in accountancy, capital and revenue. Capital means which are non-recurring in the nature. Revenue means which are recurring in the nature. Come to the meaning of all these terms. First one is capital receipts. What do you mean by capital receipts? Those receipts which are non-recurring in the nature. Non-recurring means which we will not do frequently, which we will not repeat. We will do only once in few years. So such receipts are called as capital receipts. Take the example, sale of machinery. We will not sell the machinery again and again. We will not sell the machinery only in 1 year. We will use it for few years. After that we will sell it. So we will sell the asset once in few years. So such receipts, what we get by selling the assets or what we get by selling the machinery, that is called as capital receipt here. You can say many other examples. Sale of machinery, sale of furniture, sale of buildings. Many other examples you can say. Come to the second point, capital expenditure. Those expenditures which are non-recurring in the nature, they are called as capital expenditures. It means which we will not repeat, which we will not do again and again, for which we will not spend again and again. Once in few years we will do those expenditures. So such expenditures are termed as capital expenditures. Say the example, purchase of machinery, exactly opposite to the capital receipt. Purchase of machinery. In routine terms, we will not purchase the assets. We will purchase the assets once in few years. We will purchase the machineries once in few years. We will use it for long term. We will not use it for short term. So such expenses which we will make on purchase of assets which we will use for long term, so such expenditures are called as capital expenditures. Coming to the third one, revenue receipt. Those receipts which are recurring in the nature, they are termed as revenue receipts. It means which we will do it in routine. Take the example you will come to know. Subscriptions, the fees received by school, the fees received by college. In routine, frequently we will use this. Frequently we will receive the fees. Year by year we will receive the fees. So such receipts, they are called as revenue receipts here. Take many other examples. Income on investments. You will invest something in shares. You will get the dividend year by year. You will make some deposit in the banks. You will get the interest year by year or month by month. So such receipts, they are called as revenue receipts. And the last one is revenue expenditures. Those expenditures which are recurring in nature, on which we will spend regularly, repetitively. So such expenditures, they are termed as the revenue expenditures. Example, take the examples, salaries, discount allowed, wages. So many other expenses what we will do in routine term. So such expenditures, they are called as revenue expenditure. So coming to the context of not-for-profit organization, we have to record these two things. Capital receipt and capital expenditures only in balance sheet, not in income and expenditure account. But revenue receipts and revenue expenditures, these we will record in revenue and income and expenditure account. So only revenue receipts and expenditures should be recorded in income and expenditure account, and only capital receipt and expenditures we have to record it in the balance sheet. We should not record the capital elements in the income and expenditure account. We should not record the revenue elements in the balance sheet. So this is how we have to prepare the income and expenditure account and the balance sheet at the end. And very importantly, few adjustments they will give in the problem. They are very important part of the problem. They will play very vital role in the problem solution. So let's learn about those adjustments. There are three important adjustments. First one is outstanding incomes and expenditures. Outstanding incomes and outstanding expenses. Second adjustment is prepaid expenses. Third adjustment is pre-received incomes. They will give the adjustments regarding these three important elements. It may be of current year or it may be related to the previous year. But the adjustment will change if it is of current year and if it is of previous year. So we have to make two parts again, current year and previous year. Outstanding incomes or expenses. If it is of current year, then we have to add in the income and expenditure account. And if it is of previous year, if they have given it in the previous year's balance sheet, then we have to deduct. Prepaid expenses, if they are of current year, then then less. You have to deduct. If it is of previous year, then you have to add. Pre-received incomes. If the incomes are received in advance, then you have to deduct in the current year. If they are related to the current year, then you have to deduct in the current year's income and expenditure account. And if they are related to the previous year, then you have to add. So these are the very important adjustments which you have to go through while solving the problems on not-for-profit organization. So this is very important table which you have to go through while solving the problems on not-for-profit organization. Just I will recall again. Outstanding incomes, if they are related to the current year, you have to add, and if they are related to the previous year, you have to deduct. Prepaid expenses, if they are related to the current year, you have to deduct. If they are related to the previous year, then you have to add. And pre-received incomes, if they are related to the current year, then you have to deduct. If they are related to the previous year, then you have to add. And coming to the adjustments in the balance sheet, all these adjustments are having double effect. Once you will do all these things in income and expenditure account, but in the second thing, in the balance sheet, how you will adjust it? If they are outstanding incomes, then you have to take it at the asset side. If they are outstanding expenses, then you have to take it at the liability side. If they are prepaid expenses, always you have to take prepaid expenses at the asset side. If they are incomes received in advance or pre-received incomes, then you have to take it at the liability side. So like this, we have to adjust all these adjustments in the income and expenditure account and the balance sheet. Is it clear for you? Fine. We have to go through few basic terms which we will come across while solving the problems of not-for-profit organization. They are as I told, subscriptions. Subscriptions means the fees which we have received from the members of the not-for-profit organization. It should be taken at the income side of the not income and expenditure account. I mean, at the credit side we have to take subscriptions received. Second one is donations. Actually, donations are revenue receipts. If they give only donations, then you have to take it in the income and expenditure account credit side. But if they give something in the adjustment, I mean capitalize half donations, capitalize donations, then you have to add it to the capital fund in the balance sheet. If they don't give anything about this, then directly take at the income side of the income and expenditure account. And another important concept about the donation, if it is received for the specific purpose, I will give you the example, you will come to know. If the donation is received for the purpose of construction of building, then it is a kind of donation received for specific purpose. Then such donations which we have received for specific purpose, they are considered as capital receipts, so that we have to add it to the capital fund. But if it is only donation, if they have not mentioned about the specific purpose, if they have not mentioned us to capitalize it, then you have to take it at the credit side of the income and expenditure account. Third one, entrance fees. Entrance fees. So, in the same way as we receive the donation, not for profit organization, it will receive entrance fees also. So, if they have not mentioned us to, capitalize it, then we have to take it at the credit side of the income and expenditure account. If they ask us to capitalize it, then we have to add it to the capital fund. We have to go through the adjustments. If they have asked us to capitalize it, add it to the capital fund. If they don't ask us to capitalize, then just take it at the credit side of the income and expenditure account. The fourth point is legacies. This is new word for you people. Legacies. It means the amount received by the not-for-profit organization at the will of deceased person. If the deceased person, if he gives the amount to the not-for-profit organization, if he writes the will on not-for-profit organization, then such amount is called as legacies. It is always capital receipt. It should be taken at the liability side, it should be added to the capital fund. And the fifth one is life membership fees. It is nothing but once you will pay to the clubs to get the life membership fees. I mean, if you want to be the life member of that particular society or the club, if you pay the fees once, then such amount, it is called as life membership fees. It is also considered as capital receipt. If they give it in the problem, then you have to add it to the capital fund. You should not take it in the income and expenditure account. Fine. And the last important word, it is honorarium. It is revenue receipt. It is nothing but the remuneration given to the people in order to honor them. So such amount, it is called as honorarium. So that remuneration part we have to take it in the income and expenditure account, debit side it is expenditure. So all these are the few important terms which you have to study before solving the problems on not-for-profit organization. So go through all these things, pause the video and write all the notes, and further try to solve the problems. Fine. So if you have any doubts, then ask it in the comment section. I will answer all those things. Fine. So we have studied about the not-for-profit organization, the basic things which we need to solve the problems. So just I will recall all the things which we have covered today. Meaning of the not-for-profit organization: the organization which will work for the betterment of the society, not for the profit. Such organizations are called as not-for-profit organization. This is the meaning. Examples: clubs, schools, educational institutions, gym, and all the other societies, clubs, sports clubs. All these are the examples of not-for-profit organization. Further, we have studied few features. You have to note those features and you have to practice. And the final accounts which we have to prepare in not-for-profit organization: receipt and payments account. It is the summary of cash receipts and cash payments. It includes both capital receipt and capital expenditures, and revenue receipt and revenue expenditures. And the second important financial statement, that is income and expenditure account, it is nothing but profit or loss account. In that, at the credit side, we will record all the incomes, revenue incomes, and at the debit side, we will record all the revenue expenditures. At the end, we will get the result, that is profit or loss, which we will call it as surplus or deficit in not-for-profit organization. That surplus, it should be added in the balance sheet. That is the third financial statement. Surplus, if we get the surplus in the income and expenditure account, it should be added to the capital fund. If we get the deficit, then it should be deducted in the capital fund. And all the capital receipts, we have to add it to the capital fund. So at the end, we will prepare the balance sheet. As on 31st March, we will prepare it, and it should get tallied. This is the structure of 12 marks question. And coming to the concept of capital and revenue, capital expenditure, capital receipt, both are non-recurring in nature. It means non-repeating. And revenue expenditure and revenue receipts, they are recurring in nature. We have studied the examples of capital expenditure, capital receipt, revenue expenditure and revenue receipts. And about the adjustments we have studied today: outstanding incomes, outstanding expenses, prepaid expenses, pre-received incomes. It means incomes which we have received in advance. And few noted terms about the subscriptions, the fees received by the members, entrance fees at the time of entering into the society or the club, what the members will pay to the not-for-profit organization. And about the legacies, the amount which we have received at the will of the deceased person, it is called as legacies. It is always capital receipt. About the honorarium, the remuneration paid in honor to pay the homage to the particular person. If we pay some remuneration to him, then it is called as honorarium. It is revenue expenditure. And we have studied about the life membership fees, the fees which is received by the not-for-profit organization once in few years. I mean, the members who want to be the life member of that particular organization, they will pay some amount to the organizations, it is called as life membership fees. It is always added to the capital fund because it is always capital receipt. So all these elements, all these basic terms we have studied today, and at the end format we have to prepare income and expenditure account and at the end balance sheet. Actually there are two types of problems in your textbook. One is with opening balance sheet. I mean, while giving the problem, if they give both the things, opening balance sheet and receipt and payments account, and if they ask us to do the income and expenditure account and the closing balance sheet, then it is the first kind with opening balance sheet. And few other problems are there in your question bank which are without opening balance sheet. They will not give the opening balance sheet, but they will give some information regarding the opening balance sheet. We have to use those informations and we have to prepare the opening balance sheet, and further we have to calculate the surplus or deficit, and at the end we have to prepare the balance sheet. These are the two styles of solving the problems. So coming to the format of income and expenditure account, at the credit side we have to record all the revenue incomes, at the debit side we have to record the expenditures, we have to adjust the things which they have given in the adjustments. So in this way we have to solve the problems, go through the problems, go through the illustrations they have solved in the textbooks, and try to solve the problems given in the question bank. If you are having any doubts, then text there, I will answer to those questions. Fine. Thank you. Thanks a lot.